It's been a year. Thinking back on things like Luna, Celcius, BlockFi, FTX, and some of you may be wondering, okay, I have all of this worthless crypto or crypto that's locked up on exchanges. What am I supposed to do with this, and how do I use this to my advantage to write it off on my taxes? Have no fear, I've dove right into all of the IRS.gov publications on your behalf so that you don't have to, and I'm going to cover the 3 types of loss and what to do about it. How do you deduct it off your taxes if you can even deduct it at all? The first type of crypto loss is what I call the oopsie. Think about things like you lost access to your wallet and you can't get in, or maybe you transferred some crypto to the wrong wallet, something like that, right? It's basically lost. Well, cryptocurrency in the eyes of the IRS is considered property. And with casualty losses, property losses, you cannot deduct these casualty losses anymore unless they are a federally declared disaster loss. And in that case, they would be an itemized deduction. But it's going to be hard to argue with the IRS that your oopsie crypto loss was due to a federally declared disaster. The overall idea in this scenario is that you cannot deduct these losses. The second type of loss that you can have is a theft loss. Say somebody hacked into your exchange account and they stole all of your cryptocurrency, or someone broke into your house and stole your ledger wallet, something like that. That is considered a theft loss. And unfortunately, again, this follows the same protocol as a casualty loss, that you cannot deduct it unless it's from a federally declared disaster. Now, if you lost your wallet due to a flood, that could be considered a federally declared disaster. So keep in mind the rules when it comes to those 2 situations and figure out which is going to apply to you. Work with your accountant. If you are not sure, they can read the tax code and make that decision. The third type of loss is an investment loss. Now, this is your general, I bought some crypto at a certain price and now it's worth a lot less and I'm selling it at a loss, right? That's your typical investment loss that most people are familiar with. And yes, you can deduct these losses on your taxes. I actually did a video about tax loss harvesting here. Go check it out to get more details. But essentially there is a cap of $3,000 per year of losses that you can take if all you have is losses. If you have some gains, you can do tax loss harvesting to help reduce your taxes on those gains. So definitely check that video out if you are unfamiliar with tax loss harvesting. But there's another type of investment loss that we're dealing with now with the recent collapse of FTX and other exchanges and lending platforms. These platforms and exchanges are going bankrupt. And guess what? You are probably in a situation right now that you cannot withdraw funds from these platforms or exchanges. This is a problem. So what do you do about it, and how do you take advantage of these losses and utilize them on your tax return for a lower tax bill? So we know investment losses that you get from buying a crypto and selling a crypto at a loss. That's black and white. We know the laws there and that works. The gray area is with exchanges failing. And this is where a lot of CPAs are actually disagreeing, and we can't seem to get to the bottom of it because the IRS has not given us the guidance that we need to be 100% certain that we're doing the right thing on our tax return. Isn't that grand? I dove into some IRS tax code for you, and here's what I've come up with. And I think that there are other people out there that would agree on this, and there are some people that would disagree on this. In publication 547, there is an excerpt that discusses how you can treat losses on deposits held at banks or financial institutions. And I quote, "A loss on deposits can occur when a bank, credit union, or other financial institution becomes insolvent or bankrupt. If you incurred this type of loss, you can choose one of the following to deduct this type of loss. Option 1, you can deduct it as a casualty loss. Well, we know that can only happen if the loss is from a federally declared disaster. So think about your floods, your tornadoes, your things like that, right? 2, you may be able to deduct the loss as a non-business bad debt. And non-business bad debts are deducted as short-term capital losses. So essentially, the question here is, well, does a cryptocurrency exchange count as a financial institution? And do the holdings within that exchange count as quote unquote deposits? And this is what's leaving all of this open to so much interpretation, right? Because the IRS has not given us guidance on this. So can you deduct these losses that you've incurred from these exchanges? I think that it's plausible that it could be argued that these losses are able to be deducted as non-business bad debts, aka short-term capital losses. But the real crux of the issue is a lot of people don't actually know if they're going to get some money back from the exchanges, because these exchanges are going through bankruptcy proceedings. And if you do get some money back from any of these entities, then that's going to obviously change your capital loss. There is a very strong possibility, due to how bankruptcy proceedings go and how these exchanges were structured, that crypto holders will end up getting nothing back, right? But we don't know that for sure. And the whole idea of bankruptcy is that creditors get paid back first, and then from there, unsecured creditors get paid back after that. And it's possible that you could be considered an unsecured creditor. So to be determined on that, but the hang up here is you don't actually know if you're going to get some of your money back or not. So it's kind of hard to confirm the loss that you're really going to entail from this. If anybody does end up getting money back from any of these entities after they go through these proceedings, then obviously you'll be able to take that, sell it, and then you'll have a capital gain or a capital loss, most likely a capital loss. That is black and white, very clear, deductible. So exchanges going bankrupt and you getting nothing back from the exchange is still kind of a gray area that we're waiting to get more guidance on. But you can talk to your CPA and see how they actually interpret the IRS information in the tax code, and they can help guide you from there. But you don't want to not pay attention to this, because there could be a massive loss for you to be able to deduct on your taxes. And that'll help you reduce your taxes on any future gains that you have in other assets going forward, because these losses carry over into future years. Hopefully you found this helpful and it clarified the different types of losses and the ones you can and cannot take deductions on. If you found this helpful, smash the like button for me and subscribe to my channel if you're not already subscribed. I'll see you in the next video.